All right. Welcome everyone to Tuesday's stream. Hey, what's up, guys? What's up? Doing nothing. Hello. All right. I think my audio is doing perfectly fine. I think everything is looking good as well. Hopefully on your side as well too. All right. So I just want to do a very quick stream. There isn't too much stuff to talk about because again, this entire market is driven by the news, right? By headlines. And so anything that I say could be completely negated by tomorrow or maybe on overnight, right? So, but we do have some trends that we need to talk about, right? That are currently developing. And that's something that you guys should know and understand moving forward from today. Okay, so first of all, here is the question, right? That I proposed in the description box down below, right? I said, is the stock market bottom officially here? Okay, so that is the single question that I want to answer tonight. Right, and it's gonna take a while, but I want to make a very quick stream, a quick summary as to my answer regarding that question. Okay, so hey, what's up, guys? Welcome in. Make sure you guys smash that like button down below. Hello. Right, so to start off, okay, so far today we had a slurry of news from Trump himself and our Secretary Treasury, Scott Bessent. I talked about him yesterday. And essentially, they're saying that the US is looking to back down on tariffs. So this is kind of what was expected at this point, right? They're saying we're not going to go too hard on China. I think it's time, right, to stop this tomfoolery of this trade war. And essentially, they're understanding that what they're doing is giving China the upper hand. And why is that the case, right? Why is it the case from an economic, objective perspective, right? It's not a political perspective. This is an objective, global perspective. So during this entire trade war, as I've stated even late last year, that we're looking for this administration to have the U.S. turn towards a more isolationism, right, and mercantilism, and this is not a good policy to have when the entire world is progressing. Yes, even China is a part of that progression, right? When it comes to the economy, right, their own economy and global economies that interact with each other, right? It's a convoluted mixture of relationships and tariffs and free trade agreements that make the world work, right? That make the economies work, rather. So, I think they realize that what they're doing now is not really hurting anyone else. It's actually hurting ourselves, right? And at the same time, it's giving an upper hand to our adversaries like China, maybe even Russia, but mostly China here, since that's the centerpiece for the entire reason for these tariffs and this trade war. And on top of that, we have other allies, U.S. allies like Japan and Korea, going towards China, right? To kind of lay down their own defenses that they have against each other and especially against China, and focus on building a good trade relationship, right, with China. And this is the same with other countries as well, who have been really good allies through trade agreements with the US. So this type of uncertainty is definitely, and for good reason as well, for countries to kind of back out from the US and try to alienate themselves from what's happening here in the US. And again, this is not from a political standpoint. This is just from an economic standpoint and what makes sense moving forward. And again, Trump is going to be president for 4 years, so that means Trump, the other companies as well, but other countries globally who have really good trade agreements and just overall just friendliness, right? Literal friendliness, are going to have to start backing out and backing down on trying to make things work out with the US. And they will look for other bigger superpowers like China to build better relationships. And that's exactly what's occurring so far, right? And I think Scott Bessent knows this, right? I believe he knows this because, again, he's not a dumb guy, right? He's a smart guy. And he is following, for sure, the bond markets, right? And the yields. And he's seeing that China and Japan especially are both selling US debt, right? The US bonds, right? And so it's these collective foreign nations selling US debt is not a good sign, right? And that just displays that there is a lot of uncertainty and a lot of decreased confidence in the overall US economy and how the US is showing itself in the global economic floor, right? So this is something that will, again, it has already decimated the overall stock markets and the bond markets, and I think we'll continue to see that for the rest of this fiscal year. So what does that mean for the question? And Jer, thank you so much for commenting. I'm pretty sure, did we talk before? I think we did talk before. I think I remember your username there, but so again, I've given a lot of these data points and analysis and all this different research that I've done since late last year, warning you guys about this in the official CFO Swing and Watch report. So for any of the readers who are watching the stream now or watching the replay, please go back to the reports I made back in November, October, December, January, all the reports that I've made throughout those months, right? I've given you guys plethora of data analysis to prepare us for, well, what has happened and occurred so far, right? So, and Jer, thank you so much for that comment again. Thank you so much for even writing that. I appreciate your time for even coming here and joining me for this live stream on Tuesday night. Hopefully you're enjoying everything so far as well, and including my other videos on this channel. So anyone who is just new here, make sure you guys hit that like button down below, but most importantly, smash that subscribe button as well so that you guys know when I am live. Okay, so with all that being said, okay, things aren't looking too good. Okay, now that's from a macro perspective, right? That's simply from a macro perspective where we need to focus on the fact that there's a lot of confidence that has left the US and the US markets especially, right? As risk on assets for the US equity markets. And we've seen the Magnificent Seven stocks seeing, huge outflows so far as institutions continue to deleverage, and there's been plenty of deleveraging back at the lows of April of this month, as you've seen when we had that really big acceleration to the downside. And so at this point in time, I myself, as a retail investor and trader, it just makes sense that we should be bearish for the rest of this fiscal year and maybe into next year as well, most likely, since I'm expecting a recession to officially occur and continue early next year, right? So again, I'll be providing a lot more details as we head closer to the end of this year on why I think that. And so if you guys want to read that, please become a reader of the CFO Swing Watch report. The details are down below in the description box, and you guys can become a full member of the private CFO Discord community once you become a reader of the CFO Swing and Watch report. I've said this plenty of times, so hopefully you guys know what that deal is. Okay, so as regarding to the question again, so that's the macro perspective. But when we take a look at things from a technical perspective on this weekly time frame chart of the S&P 500, we actually are in a dire need for a bounce. And again, today's news was what? Trump and Bessent kind of caving in to the pressure that they've felt from the overall bond and equity markets, including, I'm pretty sure, the people around them, right? And even Elon Musk has been saying that the tariffs are not good, since it is affecting his company, especially when it comes to energy, right? The energy aspect of his company. If you guys don't know why, please look it up. But you know, this is something that hasn't been implemented correctly. I've said this multiple times as well. And if you think otherwise, I don't know what to tell you. That's just an objective perspective. I'm not trying to be political here. This is from an objective perspective, not from a political standpoint. This is just saying what the current administration is doing, right? And again, our current administration and our entire government is being led by one single party, okay? So this is just from an objective perspective. There is no two sides here right now. This is just objective, not subjective, okay? And again, the markets have voted on that as well. Right, the markets don't lie. So when it comes to this technical bounce that I'm expecting to see, I just want to see the S&P 500 at least retesting 540 by the end of this week, and that should align with the daily 21 SMA here, my light blue line here. And again, why 540? Well, this is the other previous resistance level and also a previous support level back in 2024, and that's also when we had that big dip in August as well too. So you know, this 540 level is pretty significant as a whole number level, along with the fact that we're coinciding with this daily 21 SMA level or area. So you know, as long as we're able to retest it and then reject off of it, we can make another, yet again, lower high. And that'll be a great time for, well, to be honest, ideally, if you get a nice push up higher and we continue to push up higher tomorrow, I would love to see the price making a high at 540 and then rejecting to close out the day, right? And that'll be a perfect time to grab some shorts on indices and continue to move down. Now, as I've said yesterday too, if you were to revisit, a major level, which is 460. I mentioned this last time too. This is the major multi-year level here that spans all the way back to 2021. Okay, 540. Okay, this is the previous all-time high level, important all-time high level that we had in 2023 and late 2023 as well. So mid 2023 and late 2023, and also an all-time high level back in late 2021 and early 2022 as well, when that entire bear market began, right? So I'm expecting another bear market to occur this year, obviously, based on what I've been saying so far from a macro perspective. And if you were to come back down to hit 460, this level here, this whole number level of 460 from today's closing price, I mean, that's more than 10%, I think. I think that's like 15%? No, 14%? Yeah, 14%. No. What am I doing here? So nearly 13%, right? So obviously, due to the overnight futures action, we're most likely going to be... Oh, well, look at that. So futures actually, I didn't get to see the update here. So futures has actually done exactly what I wanted to see occurring on the S&P 500 ETF. Where it kind of revisited this area of the daily 21 SMA and used it as an area of resistance, and we had a nice rejection back down, which is also around this $5,424 resistance level. Okay, and I think we're going to continue to kind of chop around between the area that's created by the daily 10 and the daily 21 SMAs, and I would assume that would occur on SPY as well, right? So as long as we're able to come back up and retest this 540 level by the end of the week, or ideally again tomorrow, it'll be great to see the markets just push up higher early in the morning, all the way up into early afternoon. And then we retest 540 and we come back down. Again, that's just a subjective ideal perspective that I have for the overall markets. Does that make sense? Okay, so again, so what is the truth about the market bottom here? Right, have it truly bottomed out? From a macro perspective, I don't think so. We are still in a corrective phase, and also I think this corrective phase will lead into a new bear market, right? And especially a self-inflicted bear market, which you guys should remember that, right? So this is something that you guys should remember for the longer term perspective, since bear markets can last an entire fiscal year, as we've seen in 2022, and the circumstances are obviously different since this is self-inflicted. So there's a chance, okay, from a more optimistic perspective on that macro outlook, we could see a complete switch, right, back towards a more positive attitude for the entire US stock market and the economy if this current administration decides to completely do a 180, right, and say that, hey, no more tariffs, this trade war is not working out, right, it is not working out in this progressive world of economics, right? And again, I don't know why we try to do some regression policies from, you know, the 1800s, 1700s that never worked, that will never work out now, right? So, you know, again, I've stated this again late last year, and again, please read the reports if you guys are a reader and you're watching this now, to remind yourselves of what I've said and what I predicted and exactly what we got as well from that prediction. So, you know, it just seems pertinent for us to understand right now those macro perspectives and understand why we should be expecting a potential bear market into the rest of this fiscal year of 2025. Okay, so again, that's from the macro perspective. And so the second truth here that we have, so I guess the question, right? And so technically, from a technical analysis perspective, we can definitely be in a short-term intermittent bottom. And you know, Monday's low could have been the ultimate short trap, right? Where bears got trapped here and they tried to long to the downside as we made a new lower low and new lower high on Monday, and eventually they're completely pushed out overnight and pre-market hours today morning, right? So you know, there's one of those things where these back and forth is going to completely wipe out both extremely bullish and extremely bearish crowds, which will allow more lower volume activity to occur, which will also tighten up volatility, market vol, right? VIX, which has been going on, right? This VIX contraction has been absolutely on point, and we should continue to see SPY potentially moving up higher from volume, right? And again, this does not mean that liquidity is going to go down. In fact, we might even be seeing liquidity go up again, but liquidity has been an issue here. But overall, even with lower volume, right, we can still see a nice smooth sailing right up higher to give us that intermittent short-term market bottom. Does that make sense, guys? Okay, so I think, you know, at this point in time, it's just really something that you guys should understand as you have to be very sensitive to the news as well, because the markets themselves are hypersensitive. Okay, and it's something that you guys shouldn't just ignore. Yes, it's good to try to ignore the noise out there, but when it comes down to the actual headline news that the markets are looking at, like tariff news and the trade war news, you guys should look at it, right, and read what the headlines are saying, right? Because it's not just something that you guys should absolutely ignore because you don't think it's important, but it's because of the fact that it will be reflected on the actual market action. Does that make sense? Hey, do nothing said. Thank you, the God as usual. Thank you so much. Thank you for your comment. Right. So again, guys, the answer to this question is a little bit convoluted and complicated, but there are two truths to this question, which I just explained to you guys for this very, very short stream. Did that make sense? All right, see you guys' reactions there. Awesome. Thank you guys for the reactions. Okay, so that's pretty much it, guys. I mean, you know, right now the markets are way too crazy to try to give you guys an exact analysis. Again, it just makes sense for us to be looking at things from a step-by-step, day-by-day perspective. Obviously, that sucks since we are swing traders. But even if you're a day trader, I'm sure you guys are not enjoying the volatility, even though you might have easier setups on the intraday. But again, this entire market is literally littered with so many important headlines that you guys have to be focused on, because again, the markets will react off of them. So again, you know, it's something that you guys should always be alert towards, right? And again, guys, before I end the stream here, thank you, Jer. Thank you for the comments. Make sure you guys hit that link down below to subscribe and become a reader of the CFO Swing and Watch report, because I have always a lot of people asking me where they can get the report. And again, if you guys become readers, you guys will get full access to the entire private CFO Discord community as well. So you get 2 things for the price of 1. Okay, so you have many options as well, depending on what tier you guys want to choose to become a subscriber of the CFO Swing and Watch report. Okay, so again, the reports are essential to your trading journeys. And again, I'm not just saying this from my own personal opinion, since I am the writer and the researcher and the analyst, but because of the fact that, well, my current readers have told me that, right, that it's helped them so far every single trading week to prepare and what to expect for the entire fiscal year. And it just helped them navigate and guide them towards a better perspective and an analysis from macro and micro perspective on the overall markets and individual trade ideas. All right. Okay, so that is it for tonight, guys. Hopefully that was an insightful, quick stream. Hopefully I answered your guys' questions, since everyone is kind of looking at where we should be going next. But hopefully I'll see you guys on Thursday at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Good luck tomorrow and have a great rest of your night.